Welcome to the Deep Dive. Today we're zeroing in on Fox Corporation, ticker FOX. We're using their latest report to really pull out the key financials, performance, the future outlook. The mission here is a quick but thorough understanding of where the stock stands right now.
Exactly. And this report, it's packed. Stock analysis, price targets, financials, news. It really lays out Fox's current position quite well.
Okay, so let's jump right in. Current stock info.
Right. The ticker is FOX, currency USD. Last close was $51.67.
And that matches their stated fair value of $51.67.
It does, but here's something interesting right off the bat. The average analyst price target over the last 6 months, it's quite a bit lower, $40 USD.
$40. That's a gap. Definitely something to know. What about the range and volume?
The 52-week range is pretty wide, 30.097 up to $55. Volume was around 887,000 shares traded. And the market cap, 24.13 billion USD.
Okay, and for dividend investors?
There's a yield, 0.97%. That translates to about 74 USD annually. It's semi-annual. Last payout was March 5th, 2025.
And the next one's expected August 5th, 2025. Got it.
Mm-hmm.
All right, let's shift to recent performance. Q3 fiscal year 2025.
Yeah, some big numbers here. Total revenues jumped 27% year over year. That's $4.37 billion.
Wow, 27%. What drove that?
Advertising revenue, it surged like 65%.
65%. That's huge.
It really is, driven by, well, the Super Bowl LIX was a massive factor, but also Tubi's growth and, Fox News performance.
Right, that Super Bowl effect.
Mm-hmm.
Wasn't it something like over $800 million in gross ad revenue?
That's the figure. Yeah, over $800 million just from the game.
So the big question then is sustainability, right? Without a Super Bowl every quarter.
Absolutely. That's the critical point. But Tubi's growth is a consistent underlying factor, and they also saw affiliate fee revenues grow by 3%.
Okay, 3%.
Mostly due to higher rates. And that growth, importantly, it offset most of the subscriber decline.
Which was under 7%.
Under 7%, yeah. And they also hit a record quarterly free cash flow, over $1.9 billion.
Impressive cash flow. But the report mentioned adjusted EBITDA was actually down slightly.
It was, yeah. Down a bit to $856 million from $891 million the previous year.
Okay, so why the dip despite the revenue surge?
It seems to be down to costs, increased sports rights costs specifically, and also those ongoing investments in digital like Tubi.
Ah, the investment piece. Makes sense. The television segment even had negative EBITDA.
That's right, negative $60 million for the quarter, partly Tubi investment, partly Super Bowl costs. But overall, they still posted net income of $354 million.
And adjusted EPS.
$1.10. So profitable overall despite those specific segment costs.
Got it. Let's double-click on those growth drivers then. Tubi seems central.
Oh, absolutely. Tubi's revenue grew 35% year over year. It's now pulling in over $1 billion in trailing 12-month revenue.
$1 billion from Tubi. Wow. And the user base.
What's really interesting is that 65% of Tubi viewers are cordless. They don't have traditional cable.
So it's really capturing that cord cutter, cord never audience.
Exactly. It's positioning itself as a leading AVOD platform advertising-based video on demand.
And the Super Bowl highlighted its reach too, right?
Big time. 24 million unique viewers watched the game on Tubi, and it brought in 8 million new registered viewers. Huge boost.
And they expect profitability when?
The language was sooner rather than later, but they're still investing significantly, so we'll see.
Okay. And Fox News Channel. Still a powerhouse.
Seems so. Strong ratings, strong ad pricing. They apparently brought in over 200 new advertisers since the last election cycle.
Interesting. And digital engagement.
Growing, too. Record 11 billion page views mentioned in the report.
All right. Now, what about this new thing, Fox One?
Ah, yes. The new direct-to-consumer streaming service, launching before the fall football season starts.
Who's the target audience?
Primarily those cordless viewers again. Pricing is set to be in line with their wholesale rates, and importantly, they're making it available to traditional subscribers at no extra cost.
Smart move. Avoid cannibalizing their existing base.
Precisely.
Okay, but it's not all smooth sailing. The report flags some challenges.
Definitely. Those rising costs we mentioned, sports rights, digital investments in Tubi, and now Fox One, those are significant ongoing expenses.
And the traditional TV side?
Still facing pressure. The subscriber decline, though offset recently by rate hikes, is a persistent headwind for the linear business.
Any other risks?
Yeah.
Legal or regulatory?
Yeah, the Smartmatic legal proceedings are still out there, and potential regulatory changes around FCC reverse retransmission fees.
Reverse retransmission fees. Could you quickly explain those?
Sure, it's basically fees broadcasters sometimes have to pay cable or satellite providers to carry their channels.
Yeah.
Changes there could impact their bottom line.
Got it. So despite those challenges, what about Fox's competitive advantages, their moat?
The report calls it a narrow moat, which, reflects the fast-changing media world, but their strengths are clear. Leadership in live sports and news, those are sticky content categories.
Less susceptible to cord cutting, maybe?
Generally, yes. Plus, Tubi's strong position in the AVOD market is a major asset now. And, of course, strong brand recognition. People know Fox.
Okay. Let's touch quickly on financial health. Balance sheet.
Pretty strong, about $4.8 billion in cash. Debt is around $7.2 billion.
And capital allocation.
Buybacks.
Yes, they're actively buying back shares. $800 million worth so far this year. That's part of a bigger $7 billion authorization program.
Any other interesting assets?
Well, there's the option to acquire 18.6% of FanDuel. That runs until 2030. The report estimates its intrinsic value could be around $2.8 billion.
But that depends on state licensing, right?
Exactly. State-by-state approvals are needed for FanDuel operations.
Okay, so wrapping up. What's the analyst take and the overall outlook?
It's a bit mixed, honestly. As we said, that average price target is below the current fair value, suggesting some caution out there.
What are the key factors analysts are watching for the next fiscal year, FY26? Well, FY26 won't have the big political ad spending bump or the Super Bowl boost like this year. That's a headwind. But they'll be looking for continued growth from Tubi and Fox News Digital. And then there are the launch costs for Fox One to factor in.
And anything else mentioned, like that Disney office space.
Oh, right. Disney is vacating some space on the Fox lot. Fox sees that as potentially valuable, lettable asset, a bit of extra income potential there.
So putting it all together from this deep dive, Fox Corporation shows, well, really strong recent revenue growth, largely event-driven, but also powered by digital, especially Tubi.
Right. But the significant investments in digital, plus the headwinds in traditional TV, mean you probably need a cautious long-term view.
Their focus on live content and their financial position are definitely points in their favor.
True. But those ongoing costs and external risks, legal, regulatory relation, they're things you need to keep an eye on.
Really leads to a crucial question for you, the listener, to think about.
Yeah, think about how media consumption is changing so fast. With Fox pouring money into streaming, like Tubi and Fox One, how do you see their revenue mix shifting over the next, say, 3 to 5 years? What would be the key signs or indicators you'd watch for that shift?
That's a great point to ponder. If you found this focused analysis useful and you want to stay informed with more deep dives like this into business and finance, please make sure to subscribe and definitely hit that bell icon. It really helps support this YouTube channel. Thanks for diving deep with us today.